Now, amazing. Nice to have you guys here. I'm Jeffrey Benson. Super excited to come to your screen today again. Now, let's talk about Forex trading. Now, it's an amazing thing having you guys in here every Mondays because if you don't know, if you're just seeing me for the first time, I go live every Monday here to talk about forex trading and to teach you new concepts regarding forex trading. So if you don't mind, you want to subscribe to this channel so you can always get notifications to be a part of our live trading and training section. But however, we also have a mentorship group, which is 5pipsfs.com with this link right now that is currently scrolling on your screen. You can go to that website. You're going to have access to our mentorship and our free beginners courses. But today I'm going to be explaining, I'm teaching you guys on how to read Forex candlesticks currently, how to read candlesticks. And trust me, if you can read Forex candlesticks, you can read every other candlesticks, anyone, whether it's crypto, whether it's stocks, whether it's indices, whether anything, CFDs, or whether it's anything like metal, gold, in as much as you can read Forex, you can be able to even read that of cryptocurrencies. Yes. So now let's go. First, I would like to know where you guys are joining in from. All right, what's your location? What's your location you guys are joining in from? Well, I can see a lot of people joining in, but let me hear where you guys are joining in from. Okay, we have someone already from Ibadan. We have someone from Plateau, and a lot more of that people. Okay, it's rushing in, rushing in. Okay, so one very important thing I'd like you guys to know today, we have a lot of people from Cameroon, Ghana, Uganda, Turkey, UK, Kenya, Lagos, Benin City, Nigeria, Kubwa, Abuja, from Dubai, Accra, Ghana. Nice to have you, brother. From Trinidad and Tobago, from Lekki, from Kaduna, from Cameroon. Oh, I missed that. I missed that. There are many other people still coming in South Africa, Zimbabwe, like that. It's a lot from Sweden, from Uyo, and many other more. Many other people from Benin. I see one from Benin. Okay, nice to have you guys. Amazing. Okay, now, we also have people from Rwanda, from Dubai, Enugu, Bayelsa, Abuja, like that. So, today I want to teach you guys. I've always noticed people are just everywhere doing different, all sort of different things, but they don't really know what actually allow us to make money. It is your understanding of candlesticks that will determine whether or not you're going to make money in the long run, right? You have to be able to read what exactly is this candle telling me, because you might have lots of indicators in your charts. Okay, it is not indicator that move that make you to make money. It is the candlesticks that move that allows your people to count. So it is important you understand how that candlesticks work. Now, what are JCP, Japanese candlesticks? That's how they are called, JCP. Japanese candlesticks are a way that our chart is represented. It tells us the highest point where price has ever gotten to, the opening price, the closing price, and the lowest point price has ever gotten to. So I'm going to be sharing that with you guys on how that works purely. So now let us go there. If you are in here, yeah. Oh, Kojo. Yes, Harry left Ghana. Yes. So if you are in here, check in. That's Kojo, my brother. Nice to have you on the call. So if you are in here, you don't already know how candlestick work. I'm just going to walk you guys through the whole process. Now let's go. Let me share the screen and then I'll share this with you right now. Pretty simple, pretty straightforward. Every now and then you always see on our screen that we are sharing and we are something like it's always in form of candlestick start. If you are pretty new, please pay attention to this part. But for those who have been around for a while, still pay attention. You probably might just be doing it the wrong way. So if you watch this video, please just pay attention. Watch till the end. There are some secrets and things that you should be, how you should be positioned and be looking at these candlesticks. Okay, now on every candles, let me look for a plain chart for into capital. Now, first, on TradingView, you have various ways in order for you to project your chart. You can use a line chart, which is this one, which will be represented in form of line. So the reason why I don't recommend this is you are not going to have enough information. Okay, you're not going to have enough information. But there are still some people that they use this line chart, but this is not what we use. Most people use Japanese chemistry because it has been proven over time that that's the best form of really interpreting your charts. So we have various ways that people interpret these candlesticks. But trust me, the commonest way is some people will tell you this one is a bullish candle because it is green, and the other one will tell you this is a bearish candle because it is red. Not necessarily. So in this call, in this explanation, you're also going to find out how to actually spot a bullish candle from a bearish candle, not with their colors, because with these are new trading platforms, we can actually decide on what colors we want these candlesticks to be. So first, let's take one of these candles for example. Let's use this one, this big one. I'm going to zoom in, for example. So candlesticks have opening price, has closing price, has highest point, and has lowest point. So this is what we call OHLC. So you notice on TradingView, as I'm hovering my mouse around these candles, and you're going to notice that this O has a figure, H has a figure, L has a figure, C has a figure. So excuse me. So O means opening price, of any candle that I hover around. H, high, and L means low, and C means close. So since this is a bearish candle, for bearish candle, here's how to know a bearish candle. Bearish candles are candles that their opening price, okay, is higher than the closing price. So bearish candles opens at the top and closes at the bottom. That's how to know a bearish candle. So even if I have this color swapped, I make this one green and I make this one red, then you should be able to know, okay, this is actually a bearish candle regardless of the color, and this is a bullish candle regardless of the color. But it's a common practice that we have to color code it. Bullish is always green or blue, and bearish is usually red. That's how most people have it on their chart. So when next you see that, you know that okay, that's what this whole thing means. Now, what this actually simply means is price, when price closed at this point is a bullish candle. Now you're going to know why I know price closed there. Closed there immediately. This is on 15 minutes time frame. So candlesticks actually open and moves for that particular time frame. It's interval, and we can specify that on any of your time frames. So if I switch to 1 hour time frame, each of the candles is going to represent 1 hour time frame, like 1 hour behavior. If I switch to 4 hour, that means each of these candles took 4 hours to open and to close to do all this behavior. So within all this behavior to move up, to come down, to go to where it stopped, that's when all these actions were created. So what that simply means is this candle open popped up at this point and it opened. So at some point it came towards this low. It was once this bearish, this to this bottom, but it moved up a bit, and it was also once this bullish. So it went up too, but the sellers actually pushed price down, and before 15 minutes ended, then this was where this candle closed. That's what this whole thing tells us. So it's just like you having a physical candle, having a physical candle. You know, if it's a real candle, it could be any color, it could be white or red. Then if you start chopping it off without leaving with by if you start chopping the wax of the candles off and leaving the thread, so and you chop it up maybe towards like maybe to half and you drop it. Someone who wasn't there when you chop that candle off and leaving the thread will come. What the interpretation that will come to that person's head is when you pick up the candle and the thread that is long there is this candle was once as long as this extent, so it was chopped off. So that's the exact same thing that these candlesticks also tells us. So, and this point here is what we call wick or shadow. It's wick of the candle or shadow. So sometimes we start saying wicks rejection. So we meant that price actually got to this point before it got pushed and got rejected, and also price also got to this point, also got rejected. The same is true for this point too. The same is also true for this point. So price was once this long, okay, but it got rejected. Also here, price was once this long, he also got rejected. Price was once this low too, and he also got rejected. So these are the things that you have to know. Now, why am I really emphasizing and taking my time to explain how this part? Because it is really important. It tells you a lot of information. Who is actually winning the fight? And it's not in all conditions that you see price actually, because it is showing green, that doesn't mean that the buyers are winning. Sometimes it might be the sellers, it might be people who are taking profits right there, and they just don't it might be people who are taking profit at that point. It might be that there's a stop point that is about to happen. So in order for you to further explain or to express, to understand how what's about to happen at that region, that's what is going to take me to patterns, which is Japanese candlesticks patterns. So in candlesticks we have patterns, just as in the military, there are patterns, there's a tactic, there are tactics, there are strategies that they use. If you see maybe in military, raising white flag simply means surrender. Everybody have to cease fire, and then they can just know that the opponent, they're no longer ready to fight them again, that they've surrendered and stuff like that. So in candlesticks, there are patterns. There are patterns that will tell you now it's time for you to start selling. There are patterns that will form that you know you start taking position, start getting ready, and also measure with the order of your confluences. Then you know it's time for you to start buying. Now, what are these patterns? This part, it is what you have done that there are a lot of them. But first, let me not go to the pattern here. Let me explain the types of candlesticks that we have. You will notice that there are some candlesticks that the body is so small. All of these things, they've got names. And you also notice there are some that the shadow is longer than the body. And there are still some that they have no real body at all. They just have shadows. Which, when I say shadow or wicks, I can use them interchangeably. They just mean the same thing. Like this one. So examples, candles like this one, they are called candles that doesn't have real body, that are just like a cross. We call them dodgy. Okay, dodgy. Dodgy candles are candles that shows indecision in the forex market. It shows that neither the buyers nor the sellers are actually winning the fight. To me, I love to look at these things are like fight, two red and green fighting against each other, the bears and bulls fighting. All right, here's another one again. Here's another example of a dodgy. Here is a dodgy. So we have gravestone dodgy, and we have so now one thing I would love you guys to have is get this link. Let me copy this link right now and drop it. You have to study these patterns. I'm still coming to the patterns, but just for your background study, please kindly visit this link. I'm dropping it right now, right here. Someone's already asking, is dodgy same as pin top? Can you just hold on? I'll get there soon. So we have a lot of examples of dodges. Like you can see candles that have no body, but it just have shadows and wicks. So they show indecision. That is, there is none of neither the buyer nor the seller that is actually winning. So we have dragonfly dodgy and we have gravestone dodgy. So if it's a dragonfly dodgy, that simply means it's in a bully, it represents a bullish action. Okay, dragonflies are candles. It represents a bullish action. You find them at the top of a chart. So first you must have a preceding, must have like uh you must have like a preceding downtrend. So this ones suggest that price is about to start moving to the upside. It's for buys rather. It's not found at the top, it's found at the bottom. It shows that price soon will start moving to the upside. All right. So that's for the dragonfly. Then the gravestone doji is exactly opposite of dragonfly. Gravestone doji, they are found at the top, so there must be a preceding uptrend. So once price gets to like a top right here and it gives a gravestone doji, then you know that that is a signal, is a sign that the buyers are likely, they are getting exhausted, they are trying to surrender, and then sellers might take over from there. It's not just that. There are other ones that are very, very pure indecisive, that they will just be no real body. It will open at the middle. It will move as that same wick that it gives to the upside. It's also going to give that same wick to the downside. Okay, those ones are just like plain dodgy. All right. And also, if you're on your phone, you can also go to your Play Store and download JCP. Your Apple Store, Play Store, download what we call JCP, is Japanese candlestick pattern. Download that, then you're going to understand. So we have other examples of candlesticks like hammer. Okay, hammers are, just as the name implies, are candles that look like this. They look like exactly like hammers. They look like this. I don't know why this thing is not specified. Okay, just a sec. They look exactly like hammer. Example of hammers are okay, like here. That's not a perfect hammer. This is looking like hammer. But I want the one that is the top is shaven, that it doesn't have a wick at the top at all. Let's look for you always find hammer at the downtrend, the bottom. So hammers usually represent that prices start moving to the upside. Here's an example of a hammer. Here's an example of hammer. Can you see? Just as the name implies, it just looks like a hammer right there. here. So for you to spot a hammer, there have to be a preceding downtrend, and it is at the bottom of the chart. So usually they tell you that the sellers are actually getting tired. Okay, the sellers are getting tired, and the buyers are about to get into the market. So exact opposite of hammer are shooting star. So we find shooting star at the top of the chart, just opposite like this. Sometimes this body can be bullish, it can be like a green, it can be a bullish body, and it can be bearish. All right, any one of them. In as much as it stands like this, it's just what. Now, what's the psychology behind it? Psychology behind it is that when price open at this point, okay, sellers pushed down the price up onto this extent. Then buyers came into the market, they pushed it up to this extent before the time was completed, 15 minutes was completed, and the next one pulled out. So if you are to judge in this fight, remember I said we should look at it like buyers and sellers in form of fighting competition. Now, who do you think won this fight? Who has the biggest percentage? Is it the buyers or the sellers that won this fight? Let me shade it. Let me share this part. I want to reply from you guys in the comment section. Let me see if you guys are actually understanding this whole concept. Whether you guys are getting it in this chart now, yeah. Who do you think actually won this fight? Because you see, though the candle is red and it went to this extent and it pushed back up again. All right. So who do you think is actually leading this fight? Okay, someone is saying sellers, saying buyers. Okay, people who are saying buyers, hold on, buyers, buyers. Okay, amazing. It's a bias one, exactly. Though the candle is showing that it's a bearish candle, yeah. Real body of the candle is showing bearish, but the buyers actually won because imagine for what this part was formerly covered, okay, was covered by the sellers, but buyers came, they pushed it back up before candle stop here. So they have a higher percentage. So if you have to calculate the number of pips, you have to calculate the number of people from where the buyers took it from this point to this other point. That's 12 people. The buyers collected 12 people back from the sellers. Now let's see what the sellers had left. They had just 3 pips, 3.8 pips. And here's how you can know the pips. So that shows that if though the body is showing that it's red, but buyers actually are dominating in this particular this time 15 within 15 minutes. So this is how you can actually interpret what's happening. That's just the psychology behind it. Now you might not know the name. There are other ones. We have Gravestone Dodgy, we have Shooting Star, we have opposite of Shooting Star is Hammer. In bullish, we have bullish engulfing, we have piercing, we have tweezer bottom, and opposite of tweezer bottom is tweezer top. We have 3 white crows, and we have morning star. Opposite of morning star is evening star. 3 white soldiers and 3 black crows. These are opposites. They just mean the same thing. Some you can find them at the top, the other one at the bottom. So these are types of candlesticks that we have. So if you have this link, which I just shared with you right now, the chat, I'm also going to be sharing this in the comment section and also in the description box. So if you're watching this video on the later date, please refer to these links and you can read it up. It's absolutely for free. You don't have to pay anything to learn what candlesticks pattern and this thing I'm teaching you. All right. So make sure you take your time, learn it, and then you trust me, your entry game will be different. Now, why is it important that we use candlesticks? Why is it important? Let me just rush to that part, then I'll take some few questions and then we'll call it a day. The reason why candlesticks is important whatsoever type of trader you are, whether you're a scalper, whether you're a day trader, you're a swing trader, it's very important for entry and also to know who is actually domineering, who is actually in charge of this market. With candlesticks, you can determine the actual trends. Okay, with the help of candlesticks, you'll be able to know, okay, this is just a flash. Like imagine with the help of candlestick, you'll be able to know that this is just a flash and it's not an actual movement. This could just be a news movement. It's just a news event that made this to flash, right? So now, candlesticks is one of the best entry confidence that you can ever have among your arsenal. Okay, in your list of trading, it's one of the best. And whatsoever that you are using, whether you're using indicators or you're using anything, please master candlesticks. Master what they are telling you in terms of entry, master what they are telling you in terms of what it is telling you in terms of exit. Now, whenever I want to get in on a trade, I must have 2 conferences And the other thing that led me to that tells me to go ahead, the last thing is my candlestick. So your candlestick game has to be up if you must always make money from this market consistently. You have to know when it is reversing. You have to know when it is a continuation. So please also know candlesticks pattern is different from chart pattern. So candlesticks forms chart pattern, but candlestick today I'm just treating candlestick for like I'm treating them as one, just as a topic as one. So this particular candle is just a candlestick. That's what I'm explaining to you. So we have the high, we have the low, we have the body. We have dodgy type of candlesticks. We have dodgy. So we have bearish engulfing. We have bullish engulfing. We have dark clouds. We have a tweezer tops and tweezer bottom. We have three crows, and we also have the evening star, the morning star. We have shooting star. We have tweezer top. We have hammer, stuff like that. These are the things that you might not have to memorize them, but just know that how they work, know the psychology behind these candles. For me, if I want to go short in any trade or I want to go long, once I've seen my psychological level, I've seen whatever thing that you're using, whether you're using moving average, you're using RSI, you're using stochastic, you're using MACD, or you are probably using indicator a custom made indicator that you bought for a very flashy amount of money, whatever it is, please and please understand that whenever you see a gravestone doji, that simply means a bearish action is about to happen. Okay, whenever you see, which is opposite now, whenever you see a dragonfly doji, a bullish action, bullish market is about to happen. So just slow down. Market is about to slow down there, and just take action, take precaution there. If your indicator is doing something different from what the chart, the candles is telling you, just stop. So I know trading is a continuum, something that you keep learning. Okay, I'll expect you to play this video over and over again and also read alongside with what we have here on this website I'm sharing with you guys. So for those who do not really know how candlesticks are being formed, yeah, I explained earlier, but if you still want a graphical representation, they're all here. All right. So now let me fast forward and take you to the chart patterns. Just as I said, candlesticks candlesticks are different from that's Japanese candlesticks. Okay, that's a different topic, and the patterns are different. Now let's talk about pattern for a minute. Patterns are divided into two. Patterns are when the candlestick comes together to form a shape to tell you what to do, whether to go for a buy or to go for a sell. These are patterns. All right. So we have reversal patterns and we have continuation patterns. Reversal patterns are patterns that will tell you that whenever you see this pattern, just know that the trend is about to end. It's reversing. So if formerly if you're in a buy trend and uptrend, then if you see this reversal pattern, stop buying. Just know that market is going to slow down and turn to the seller's side. Now, examples of these reversal patterns are what you have right here. You must have heard me talking about M patterns or double top. This is example. These are reversal patterns. All right. So double top, head and shoulder, rising wedge, double bottom. These are exactly opposite of these ones that you find at the top. These are opposite. Double top is found at the top of the top of the charts. So this signifies that price will start dropping from there. Okay, and please don't just use candlesticks as a left alone indication. Make sure you add other things that you know works. Okay, add other things. You must have seen other confluences. It is always advisable you have at least two to three confluences before you go in on a trade. All right. So each time you see a head and shoulder, you have to cross check. Okay, is there a demand zone right here? Is there a supply zone, or is there a turncoat right here? Are there other reasons that is corroborating me selling at this point? Okay, these are the things that you have to check. When you also see a rising wedge, you also have to put into cognizance, has price ever gotten to this point before, and how did that price react? So things like that, these are the things that you should be asking yourself whenever you get to a significant point and you are seeing chart patterns. So this is the reversal chart patterns. Okay, and on this one, this is the bullish patterns for continuation, bullish patterns. So flag patterns are very, very popular patterns. So as far as I'm concerned, I calculate all these ones as flag patterns, just as they look. They look like in form of flag. Like the pole, this is the pole sort of, and this is the flag, body of the flag. All of them, I call them flag patterns. But in stages, you know that this is a falling wedge, this is a bullish rectangle, this is a bullish pinner. on and on. So, but one thing I want you guys to know is not to complicate this part of your trading. It's not compulsory you know the name. What's compulsory, what you should know is the psychology behind them, how to trade them when you see them. Okay, how to trade them. So these are the patterns. Okay, then the opposite of falling wedge, we have rising wedge. Opposite of bullish rectangle, we have bearish rectangle. Opposite of bullish pennant, we have bearish pennant. Okay, I'm sure. Let's stop there for now. Now let's go on to how to trade them. Now you can clearly see on the screen it is shown how to trade a double top. First, you have to confirm that this is a first leg, which is what I always call it, like M pattern. This is a first leg, and once price move down, it's going to move up as though it is forming a V. So if it's forming a V, you are not to buy there. Don't buy, just hold on and don't just get in so fast. You have to watch at this top here and you watch out for candlesticks rejection. Now, here's where I have to draw the similarities and the difference. So the similarity between candlesticks now, which I treated first, and the chart pattern is candlesticks forms chart pattern. So when they're in group and they have a pattern, they form like they have a shape, we call them chart pattern. But if it's single, these are candlesticks. So candlesticks has a lot of information to tell you, and the information, the way candlestick form has a very long way to tell you whether or not this is a pattern that is going to hold or not. Sometimes you probably must have seen a chart that looks like an M. Then before you know it, it turns to a W, and before you know it, it start moving up and start doing what you don't even expect. That's because you didn't really pay attention to what the candlesticks at that time were telling you, where those candlesticks that were forming the M or the W then were telling you. Sometimes you can see weak rejection, or it wasn't giving weak rejection. It's showing a double top. That is, double top simply means you have to sell. But then the candlesticks are this leg, this top bigger leg is not giving you the rejection that you want to see. It's neither giving you a shooting star, because you need to see like this candlesticks pattern there. It's neither giving you a shooting star, nor is it giving you no, is it giving you what's it called? If it's found at the top, it's morning star, evening star. It's not giving you an evening star, and then you just hop in. So you have to see at this leg, you have to see an evening star. It's either this first leg or the second leg. The same thing applies to all of other patterns. So I'm just going to focus on double top because this is my favorite pattern. This is my favorite pattern. So once I see any of these candlesticks formed right there, whether it's any of the bearish signs, like I would want to see a bearish engulfing, or I would like to see a shooting star at least, or I would love to see a gravestone doji, or I'd love to see dark three black crows, or evening star, or even dark cloud cover, tweezer top there. Then from there, I will just go short. That's another conference. After I've had other two conferences, then I know it's time for price to start moving to the downside. That's how I do it. Now, it's not compulsory you trade all patterns. Now, I've read several books from big traders. I've read books, Reminiscence of a Stock Operators. Most of these big traders like George Soros, Jesse Livermore, people, greatest trader who has ever lived, and people who are still alive, which is George Soros, they have a particular pattern that they trade. For me, I just do double tops. And if you have been following me for a very long while, which is why I always recommend you subscribe to this channel and follow me on all my social platforms, which the links are in the description box, you know that what I do every time that brings about my success is I love to stick to one thing and I master one thing. And Jet Li says something. He said, it's not Jet Li, sorry, that's what's this Chinese guy that fights, that does kicks and all of that. He said something, I can't remember the name, but I know him very well, but I've forgotten the name right now. He said he respects a man that's mastered one kick over time. Okay, over time, over and over again. You respect that person that has mastered one kick 10,000 times than someone who has 10,000 different styles of kicks. So it's not about how many kicks you have. Thank you. That's Bruce Lee. Thank you, Tosin. Bruce Lee. Thank you. That's Bruce Lee. It's not about the number of things that you have, number of strategy, the number of, or what's it called now? Since we're talking about patterns. It's not about the number of patterns you know, is how many of these can you actually take advantage and make maximum use of? How many of these can you spot and you trade it correctly? Okay, that's what really matters. Now, if you see an inverse head and shoulder, would you be able to recognize it? Would you be able to trade it? Can you be able to milk it out and make the maximum, the most money off of it? So that's the question. So start focusing on, even if it's just one, maybe it's a double top you want to master, go on your chart. Now, here's how to find this thing. Let's start looking for example for double tops now. So I'll just come on GBP I'll start looking for charts that has double top point chart pattern. So here's an example already without even going further. Here's an example. Here is the top right here, first top, and here is another top right here too. So it forms like an M. So from here, you should have gotten in from the way to trade. You get in right here, put your stop loss here, and then you watch it dive down, just as this part, just as it was explained right here. You see, from here you enter when by it does any hesitation around here when you are sure that it's actually an M. You enter, sorry, you enter somewhere on the neckline. For me, I used to enter here, but as you're practicing, just take it slowly. Enter on this neckline entry, okay, and then you put your stop loss a little bit on the recent high that it was created, and then you allow it to dance down to your target. Normally, you always recommend to target 1 to 2. That is, if you're risking 2 pips, if the distance from your entry to your stop loss is 20 pips, target 40 pips, 1 to 2. If it is 1 pip, target 2 pips. That's the ideal practice. Okay, so you can see I just spotted one. And another easier way to spot it, it might be very difficult for you now. Start now, you might not find it really easy spotting it. I know some of you are newbie watching me. Another easier way to do it is once you get to this pattern, now for you to get the M, just for you to look for something that draws M. So what you just do is come here to your candlesticks on your trading view, you change this chart to line chart. So immediately you change it to line chart, you see you shrink it, it's looking more like M. Now don't expect it to be a perfect M, like it should be something like this. I was also doing this mistake when I started, thinking, oh, it should just be an M like that. No, market doesn't move just straight like that. That it will draw a perfect M. No, don't expect it. It's gonna make noise like this. You also make noise down, make noise up, and then start dropping. So you find an exact same behavior. Now in this case, this is the neckline for this. This is the first leg. This is the second leg. And here's where you're expected to start shorting. You're expected to start selling right here. Remember, short and sell is the exact same thing. I'm talking to the beginners in the house. Then you put your stop loss right here and you take profits. Whatever your stop loss is. Now, let me explain this part regarding stop loss. And let's say you had your entry here. So you have to calculate what is my stop loss, what is my stop loss value. So from here to here is 36 pips. You are risking 36 pips. So you have to target times 2. It should give you times 2 of what you are risking. So 36 times 2, I think that should be 72, if I'm not mistaken. Yeah, that's 72. So you have to calculate from your entry again, target 72 pips. So that's it, 72 pips. So at this point, you should already be out. So that's how it works. So immediately you've already spotted your M pattern with your line chart, immediately change it to candlesticks. I believe this is the best type of candlesticks that you've ever, is the best graphical representation we've ever had as at the time of making this video. Candlesticks is the best. It gives more information as to what you are doing on the chart. I'm sure you guys love this content that I'm putting out today, most especially for, I know it's more beginners related, and for those of you probably might be reading it the wrong way. Today you must have learned a thing or two, how to look out for things or something. Please kindly like this video, share with people, and let this video touch as many people that are ready to learn Forex. I mean, it's for free. They should learn it. They should have access. Remember, as I always say, the fight is not against me and you, or who is the richest. Oh, I'm richer than you. You're richer than me. That's not none of our concern. The fight is against poverty. What I am most concerned about is I get this whole thing right as much as you are getting it. Okay, I'm happy making this content for you. So also make sure you enjoy this content and also share with people around you that you think you need to also as well impact. So do not forget to check this link, and also do not also forget to check our website. Website is 5pipsfx.com for more mentorship. So if you want to fast track your forex trading, you can just come on to this website, 5pipsfx.com, and start learning. So if you don't have money at all to join our mentorship, you can start with the free classes. The free classes are meant to jumpstart you from where you are right now, from novice, when you don't even know the tools you would need. So it's going to walk you through the tools you would need to what is Forex up onto this candlesticks formation. Everything is all in this course for free. So if you love what we do right here from the beginners class, then we're expecting you to move to the mentorship, where you have live mentorship, able to trade, and also trading every Wednesdays and Fridays. So that's how everything just basically works. So if you have a comment from me in the comment section, drop that. And if you have questions, you can also drop that. I'll walk around again in this post and then reply you guys as to the update I found regarding your question. I'm sure that's going to be it for now. And I'm sure you guys enjoy this class as much as I enjoyed making them for you. So thank you guys. So let me just take, just as I said earlier, let me just take two questions, and then that'll be all for now. Okay. Uh, okay. Now, amazing question. This is from Cynthia. Jeff, what do we get for the 1 month subscription? You get exact same things for the yearly. It's the exact same thing. Just that it's your duration that is different. For 1 month is $9 that you have to pay for 1 month. And what you get is you're going to have access to our live our chatting platform, which is a private mentorship one. You can ask him questions at any time. And most importantly, we go live on Wednesdays, and on Friday you get to ask your questions live. We unmute you over Zoom call. We unmute you, join people joining us from different countries, for more than 20 countries that are joining us. And then we're going to share ideas together. If I'm in on any trade, I'll share my opportunity with you. And also, each time I'm about to get in on a trade, I alert you guys first. I alert the monthly and the yearly first before I put out on my general platform. Uh, I'd also keep up with them. Like, I might not be able to start keeping up with the general group because there are a lot of people there. But if you're in the yearly and the monthly mentorship, I tell you, this way I'm modifying my stop loss. This is what I'm doing. I'm adding new entries and all of this nice stuff. And you can also ask me some advanced questions right there. And I can also guide you through your FTM challenge, my Forex fund, any proprietary firm challenge that you are in on. And if you just have anything, basically, if you have a psychological problem, it's meant for you to. For those who have psychological problem trading, they are having difficulty, they don't really know what their problem really is. They've tried many things, but they keep losing money. So I think these are psychological problems. We tackled that on live sessions. So these are the things that we do. And also, yeah, like that. So that will be it for now. A nice question. How do you apply time frame to candle patterns? How to apply time frame? Let me share my screen one more time before I leave you guys here. You just click on your time frame tab, your time frame bar. On your trading view, you check at the top or left corner from here. See 15 minutes, or you can click on this drop bar. You select any time frame you want. If you click on 15 minutes time frame, what that simply means is all the candles here took 15 minutes, 15 minutes to open, to close, to do all the areas. If I click a 1 hour chart, that simply means each candle is on this, so it's going to load up. Each candle here took 1 hour to open and to close. I think that answers you guys' question. So just so you guys are thinking that, oh, why is Jeffrey talking about candlesticks? This is pretty basic for us. You see someone just asked how to apply time frame to candles, just to tell you that there are a lot of beginners still watching us. So that's why I want to carry you all along. So that'll be it for today. So share this video, like, subscribe again. Bye for now. Bye.